Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So we have these shifts in momentum that look a bit like this. Let me see if I can draw this up here a little bit better, where you can see that shifting momentum on each of those upside moves, where we have the strong overall upside into resistance, a change in momentum, and then another change in momentum before it leads to that sharper breakdown pattern. And again, the reason that this is so important is because these shifts in momentum are going to give you an idea of how quickly larger price support and resistance levels are going to hit. If you have a strong overall momentum move, such as this rally here, and you don't have a shift in momentum, and instead it forms more of a sideways slower move or slower correction and pullback. Let's say, for instance, it rallies here, drops here, bounces back up, basically no shift in that upside momentum and no higher highs to help shift the momentum on that. Well, you're going to have a much more difficult time seeing any strong price correction or continuation of price correction to hit any target level that would be down here a little bit farther. Instead, you have to see that rolling over in momentum in order to hit objectives that are lower in that particular security. We can see a larger example of this playing out over here, where we have a smaller version of that hockey stick formation and a strong breakdown. But we also have this ABC formation we drew up here playing out now in this larger time frame, where we had that shift in momentum taking place right up in here, now forming on this time frame as well. So we now have a bigger time frame pattern. And this creates the potential for this this particular security, which is the euro option, to create a potential short pattern or short strategy that's currently developing right now. Of course, to confirm it, we need this lower trend channel here to continue this lower momentum and break strongly down on the downside. The next thing I want to look at is a little bit in terms of how pace or momentum plays out once a strategy has actually triggered, and how you can use that to kind of time where you need to be exiting your positions. Now, one strategy that works great for trying to set target levels is a concept of measured or equal moves. And this is one that's become a little bit more well-known, more popular over the years, but when I first started teaching it, very few people had ever even considered it or heard of it. And it's such a simple strategy. It's just like pace. You know, a couple of years ago when I started teaching about pace and momentum in this particular type of development, people, they didn't seem to realize that this was such an obvious part of price development. They didn't really, attach that much importance to it, but once they caught on, it's like, duh, why didn't I think about that before? And when we're looking at measured moves, the basic concept is, if you have a move such as a rally or an uptrend, and then a slower gradual correction, and then a breakout or continuation, as long as the momentum of that continuation move starts out to be similar to the move going into the correction, the chances are that it's going to stall when it hits an equal move. So for instance, A here, let's just say that this is 5 points. Well, as long as the momentum starts out here in B as the same as it was in A, then the chances are that move B is going to be 5 points before it hits resistance and starts to correct. If, on the other hand, it breaks more gradually out of that correction, the chances are that it's not going to hit that equal move. It might only be 2 or 3 points before it breaks down and forms a reversal pattern. Alternately, if it's stronger than the correction and stronger than the break higher marked A, the chances are it's going to be a greater than equal move. So it might be 7 points, even 8 points. Let's look at some examples of this. One of them took place in the U.S. dollar Canadian dollar pair. In this case, I actually have the currency pair shown here because it's from a previous presentation. I pulled up this particular slide and used this slide that I'd given last year, though, because it shows you how the template that I created just last night plays out over time. I created that pattern, that template last night without having gone through these charts beforehand, and yet you can see over here the similarities in that price development. Even this correction here between A and B, it took 2 waves. Now in this case, we have a slightly higher high, whereas on my template, I showed a momentum change within the range itself. But it's the same type of strategy exactly. And you can see the momentum shift here, kind of more of a little bit of a rounding off. Then that slightly higher high, which is what took place on move 4 in our template. And then the drop here, sharper drop, which was marked D on the template. And then the shift in momentum for that avalanche pattern. In this case, it's part of the head and shoulders pattern as well. The avalanche just refers to this particular segment, and it can be part of any overall reversal pattern off of highs. It could be the handle of a cup of handle, could be a peak, and then just a leg or a base here. We're only looking at that particular segment for that name. But you can see that the strategy is almost exact. And so if we're looking at this template here, D, as long as the pace or momentum broke down out of C at the same momentum or pace move as D, you'd be looking at a target that was an equal move to D. In this case, the momentum was a little bit slower, so it probably wouldn't have quite hit that equal move. But in our U.S. dollar Canadian dollar pair, the momentum was exactly the same. So it came into not only price support from a previous low, but also that equal move support before it led to that corrective move. Looking at another example from that same webinar a year ago, when I was looking at this equal move concept, we were looking at the Euro-US dollar pair. Now, of course, keep in mind when you're looking at the options, this is going to be flipped around. So the chart would look inverse of this. We were looking at a strong upside move going into the end of the year, followed by a base and then a break higher. And so we were looking at this price level here as a target level, leading to a larger corrective move or the potential for a larger corrective move. We even saw actually that there was a start of a potential change in pace or change in momentum here because we had a stronger pullback back up into the high. So this easily could have created that boot pattern, and that strong resistance level from that equal move created a higher probability of a larger correction taking place off of that level.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.